Welcome to the closing beat, everybody. Happy Friday. Yeah, it's Friday. I always lose track of the days there. This is our quick stock market update show that we do just to cover the overall markets, the good, the bad, and the ugly. Try to leave the opinion out of it, just get right down to the details and share with you what's happened today. Well, it was another positive day. So we finished out the quarter positive. If you look on your screen to your right, you see the Dow was up by 211 points, S&P 19, and the Nasdaq 60, so still connected. Remember, 2 days ago we were disconnected. We had the Dow lower because of Boeing and some other stuff, and the S&P was still higher. So yesterday, back to together, broad-based rally. Today, back to together, also broad-based rally. And that bottom right-hand chart that you see shows the progress every 5 minutes. What happened? Like a little heartbeat throughout the day of the markets. And you could see it was just one of those trend days, right? Just consistent, no real press to the downside. And any attempt to move to the downside was sucked right back up by the bulls going into the end of the quarter. Told you I'd give you some stats here for the markets. So what you'll see on TV is it was the best first quarter since 1998, which puts me back in high school, actually. And it was the best quarter just out of all four since 2009. That's the general stuff, but let's dig in a little bit deeper. Now, next week also, we're going to do our Wine and Wealth classes, our portfolio update, as well as we're going to go over the stats of April, what to expect in April, what's the sort of monthly expectations like we've done in January, February, and March. And I can tell you that April is a month you don't want to miss in the market. So it's not like February. Remember, February was a sort of a snoozer. We expected that. We talked about it. It was all quiet. Remember also that at the beginning of the year, the first 2 days of the year, remember, we were down 2%. A lot of it had to do with Apple and their comments and everything. But the market sold off 2%. Remember, we looked back and said, that seems rare. Like, how often does that happen? 5 times. Can't even hold it on one hand. 5 times in the history of the market, right? The entire history of the market has only happened 5 times where the first 2 days of the year were negative by 2% or more. So we've rebuilt, obviously, from a massive sell-off at the end of the year, and then the first couple days of the year still kind of nasty, then, bouncing off those lows. So let's take a look. Stats, quarter 1 and quarter 2. Together, they are positive over the lifetime of the markets going back to just after World War I, actually. They're positive 62% of the time, so not a gimme by any means. Q4, by the way, is the leader. So if you ever wanted to know, like, what's the best quarter that has the highest percentage of being positive over history, that's quarter 4, 78% of the time. And Q3, by the way, is always the weakest. I mean, you can look at any study, anywhere you want to go. The third quarter of every year is always one where you're like, oh boy, here we go. It's actually only positive 60% of the time, so if that's something you care about. The average return for the second quarter is actually 1.9%. So that's going back over the lifetime of the markets, 1.9%. Obviously, we did well this quarter, but the average return that you kind of see and expect, obviously 62% of the time, is 1.9%. Interestingly, the average return for the first quarter is only 2.2%. Here's the issue. Last 10 years, been in a great economic expansion. Everything's good. The stock market's done well. The second quarter in the last 10 years has been the worst performing quarter out of all of them. So there's all this sort of positive news. Everybody's yeah, everything looks good. They keep dangling the whole trade war thing carrot. It's going to happen. It's going to happen. Don't short the markets. Well, the second quarter for the last 10 years is by far the weakest and is only positive 60% of the time, averaging 1.4%. Did you get all those numbers? Was that enough? Did it just drive you crazy? Anyways, so that's some of the stats I told you I would give you today. Hey, by the way, if you missed our class last night and you're one of our customers, head over to the dojo. You see it on the screen there. It's now the top video, so we put it right there at the top. We talked about the analyst ratings, what it all means, where are these guys standing right now. But you can also go back and look at all of the other videos that we've done, ranging from very basic to extremely geeky classes with tons of data there. So that's always available for our customers. As soon as you have your account open, funded, we start investing for you. You get an automatic email for that. So check it out there in the dojo. Anyways, so you have the market performance on the screen. You see it's positive. We finished the quarter good. Everybody's happy, right? At least for now. Let's talk about some of the leaders in the market, some of the things you might want to take a look at. I'll just go over here real quick. Semiconductors. Oh, Yeah, we'll use this. Semiconductors over 1.5% today. We talked about the 20-period moving average all week being something that maybe it just couldn't hang on to. And so far, so good. Back towards the highest levels of the week. So looking pretty good there with the semiconductors. That was also your leading area for the day. One little weak spot, right? You want to see one little weak spot in the banks. They just didn't give you that full rally today. If you're familiar with candlesticks, and by the way, you can go in the dojo, right? More marketing. Look at him go. You go in the dojo, you click on Wine and Wealth, or I'm sorry, it's under the Wine and Wealth, I believe. Yeah, here we come. And there's 3 candlesticks classes. I refer to candlesticks a lot. Just gives you an idea of what happened throughout the day. Well, here is 1, 2, and 3. Candlesticks 101, 102, and 103 if you want to look at it, going through all the details of how they work. That's the last of the marketing of this, by the way, just so you know. Well, today's candlestick, if you look up here on today's performance, we started higher with the banks and faded away. Very similar to early week's performance with the overall markets. We started off a little strong and faded away. Remember, you need the banks in there. You need the banks to have any sort of significant rally. And today they sort of get a pass because a lot of the negativity came from Wells Fargo. Right? The CEO stepping down. Well, he's retiring. Right? So he's retiring. I hope this means good things to come for Wells Fargo. It's the only company I've ever bashed on this channel. Otherwise, very positive. Just keep positive. Try to be nice, easy going about it. Wells Fargo was lower by 1.5% today, so that dragged down your bigger banks. And if you like, you could take a look at the regional banks as well. Started positive, just nothing to grab onto there. It was a decent recovery off the Fed announcement sell-off, just nothing good to grab onto, especially with Larry Kudlow out there saying you should cut rates by 0.5%. He should probably just focus on his job and just do that. Crude oil hit new highs today. That puts it up 32% for the quarter. So there's your killer leader, by the way. We've talked about crude oil pretty much every single day here because crude oil's in this sort of stair-stepping mode, and we really just every little pullback gets bought up. Every little pullback gets bought up on that thing. So crude oil continues to be something definitely that's very, very strong. Moving on to healthcare. Healthcare, after all the excitement this week, right? The weakness to start the week, a little bit of bounce there going into Wednesday, and then the sell-off yesterday a little bit. We finished back at the highs. We call that Christmas tree trading, by the way, because if you were to sort of break down each day, green, red, green, red, green, red, right? So back to the highs of the week, healthcare. And now our customers know from our class last night, where does healthcare stand with analysts? What are they thinking? Why are they so interested in this sector here? So now they know that in that video, of course, in the dojo. I told you, I wasn't done marketing. Transports, so great performance for them, by the way. If you're following this category, not something it probably should have done. Tons of overhead resistance, and every day it managed to poke through that. So that's that on transports. Again, rails. Follow the rails, your Norfolk Southerns. NSC is the symbol if you're following along. Broke to new highs today. Kansas City Southern, which is, I think, the 5th largest in the group, actually turned negative on the day. And so, we can maybe do CSX as well. Hitting new highs there for the week. So helpful for the transports overall. Well, I think that's all I have sector-wise that I wanted to cover. REITs pulled back a little bit today. No big deal. They're sitting near highs, looking pretty good there. How about Lyft? Did you participate on a little Lyft today? So Lyft opened up, just incredible how much excitement they draw for this IPO. This was only Lyft. Uber's like 4 times bigger, and they're next, right? And Pinterest and Slack, and you had the guy from Casper. You ever order the mattress and they send you in the box? That guy's on TV like, well, it kind of looks like IPO markets are favorable. Maybe we'll go public. So heads up, there's going to be a ton of brand names. That's not even including Airbnb and Slack, which are in the mix as well. Anyways, Lyft, we talked about this yesterday, raised their price range 70 to 72, lots of demand there. They opened up at $87.24. So at the opening price, give them a market cap or a value of $25 billion. And they lose money. That makes me feel good, right? Like Jazz Wealth, we're worth $50 billion, right? We can just make up stuff at this point. Holy cow. So the company loses money. Did a video on this just so you know exactly where they're at, where they're coming from, how progress is going with the company, all the little geeky stats. Go back on our channel, check that out if you're interested. But pretty much a successful IPO, right? Pretty strong. And by the way, it was so successful. Remember, they issued 32.5 million shares or 33.5 million shares, somewhere in there. The number of shares that traded hands today was twice that, more than twice that. 70 plus million shares traded hands with Lyft today. So the demand, holy cow, the buying and the selling taking place there, you would consider that a pretty successful IPO. We'll move on to some of the other ones. CarMax broke above the 200-day moving average today, higher by 10%. So they beat on earnings. Revenue was a little light, but sales, car sales, right? You know how I tell you, there's always something that we look at for each thing. Netflix, subscriber counts, all that stuff. CarMax is obviously sales. How many units did they push through? They don't have higher commissions on some, or they don't obviously negotiate, right? So it's units. Like, did they crank out these units there? And what were their sales? They were about 3% higher year over year. That's good enough on that size company. That's a really good position, actually. So the stock moving back above the 200-day moving average, looking pretty good there. What didn't look pretty good? Restoration Hardware. Even if I won the lottery, I would not buy furniture from this store. Like, you go sit on the couch. The lady comes over and she's like, "It's a beautiful couch, isn't it?" And you kind of like enjoy. It's a very nice couch. And the lady goes, "It's $17,000." No kidding. It's a couch, $17,000. Well, guess what? These guys focus on the ultra high end of the market. Nothing wrong with that. If you want to spend $17,000 on a couch, that's cool. But the problem is the ultra high end of the market, and then all those people that shouldn't be spending $17,000 on a couch but still do, they're drying up. All of a sudden, people don't want to spend that. There's an outlet store, restoration outlet store near me, and the patio furniture was $4,200. It's aluminum. I mean, I know how it's made, right? So the upper end of the, the furniture buying, the people that buy the sconces and all the drapery and stuff, that's drying up. Stock was down by 22% today. It's known for being volatile, right? Because it's heavily dependent on that higher end of the market. So where just got clobbered today. We covered Wells Fargo already, CEO stepping down, and I think that's about where I'll leave you. If you have any questions, I'm happy to take a shot at answering them. Not promising I know the answer, but I'll take a shot, and we'll see what we can do. Financial investor pays off his car, 0% interest, 5 years. Killing it, man. I like it. Very nice. Yep. Very, very nice. $30,000 recliner. Yeah, you know. You've obviously been there. Beautiful store. I love the store. Man, the furniture is gorgeous. Everything about it's great. I'm not paying that much. Airbnb, when is their IPO? I don't know. I don't think it's anywhere in the close future. I know they're in the mix and they want to go public this year, but we haven't really come to that point where they've started the roadshow or started any really significant filings towards it. They will go public this year. That's their goal anyways. It's going to be hard for anyone to compete with Uber, by the way. We did Lyft. Everybody's excited. Uber will dominate the headlines. So, there were other IPOs this week, right? I think there were 6 this week. Did you hear about them? Nothing, right? So going forward, these other companies kind of got to sneak in there and get the job done. Otherwise, when Uber really heads and officially gets going here, right, it's just going to be, how do you get attention? If all the money's going over there, how do you get attention? So it'll be tough. Ramon, first time watching you live. Thanks, man. I appreciate you watching live. I'm glad it worked today. If you won the lottery, would you do lump sum or annual payments? I trust myself. I would do the lump sum. That simple as that. It really depends on the individual. Do you trust yourself? If you do, lump sum. Put it to work. All right, that's all I have for you today. We'll wrap it up a little bit earlier than normal. Let me check one last thing here before we go, just out of curiosity. Yep, that's it. Gonna end it right there. I hope you have a great weekend, and we'll be back Monday, of course, to do it all over again. Thanks for watching. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.